What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you as always, I am the people's champ of Wall Street, the bearded boy wonder, Dave Bartosiak. And today, my friends, it's a glorious morning, and we are going to talk about a little Chinese company you may have heard of by the name of Alibaba. Funny story. You know, I got to give you the random funny stories, right? Random funny story that I have for today. I went to a shawarma joint down the street, and I always look at the reviews, right? Because I just can't go in blind. Well, I guess I can, but I look for reviews and try to find places in the area, and then I go check them out. That's what happens. So I pull up the first picture of this place, and it's the owner with Jack Ma. What? So Jack Ma goes to the shawarma place by my house apparently when he's in South Florida. So that was funny. Let me see if I can find that picture actually, because I was like, what is going on here? Very, very random. Did not expect to see a picture of Jack Ma at Zatar Shawarma Falafel Station. And there you go, guys. Who's that? That sure looks like Jack Ma, right? That's not just a random Chinese guy that looks like Jack Ma. He's got a very distinct Jack Ma head, right? That's Jack Ma at the Zatar Shawarma Falafel Station, which happens to be, man, small world, guys. Well, this is all coming together. I was just complaining in the chat room how the nearest Starbucks is 3.3 miles away. It's actually right next to the Zatar place. And yeah, that's Jack Ma, right? Sure looks like Jack Ma to me. So pretty random stuff going on there, okay? So everybody, Terry P, you're back. I hope you caught some of that U.S. Steel action. I hope a lot of people caught some of that U.S. Steel action. EJ, how you doing? Welcome. Now we got EJ and PJ. Trevor, Kurt, usual suspects. I'm sure Hefe is going to be here any minute now. Okay, guys. Well, let's go ahead and get started with this, as we've got a lot to cover. Little, I guess, housekeeping initially. Guys, if you guys and gals, I say guys in the neutral sense, but I guess I'm not supposed to do that. Anyway. So, if you're not already hooked up, all right, sweet. And that's what I'm talking about, Terry. This is the thing, guys. When you're watching these, Greg, how you doing? Eric, what's up, man? Hey, when you guys are watching these, okay? I'm not forcing you. Oh, Daniel, wow, we got a lot of new faces. Wonderful. When you guys are watching these, I'm not telling you should, in fact, trade these options, right? There's a group of us who like messing around with options trades on earnings, and then so I give suggestions, right? But what's really the good takeaway is the analysis that I do before we get, oh, of course it's going to creep down. It popped up. It's going to gap. We'll get into day trading stuff but later. But anyway, it's the detailed analysis. Mr. Williams, how you doing? The analysis before we get into the option stuff that I think everybody can benefit from. So if you notice, that's why most of the show is us doing the analysis, right? And then at the end, we talk about the option stuff for those who choose the option stuff. EJ, PJ, AJ, oh my. BJ, HJ, ZJ. If you don't know what a ZJ is, you can't afford it. Anybody guess that movie? I'll let it marinate. There's a little bit of a delay, guys, from when I talk and when you guys hear it and see it. I think it's 30 seconds. So I laugh to myself, and then eventually I see it pop up. Anyway, guys, if you aren't signed up with us in terms of the distribution list, shoot me an email, livetrader@zax.com. That's coming across the screen right now, and I'll get you on that email distribution list so you can check out when we're doing these. And then, of course, the the Discord chat room that we got that's going to be coming up here also. So if you don't mess around with Discord, it's pretty cool. I think we like it. We all like it here. Also has a chat app. There's Discord coming across the screen right now. So hang out with us there in the Discord room. Somebody will put it up here. Okay. And before I get started, guys, I've put in the details here. Sorry, the South Florida. Allergies are killing me this morning. I can barely breathe. Wowzers. I know you guys wanted to tune in just to hear me cough. I have the Alibaba conference call details up here. So tomorrow morning, 7:30 Eastern. This is the phone number, and then this is the passcode, so you can listen in on the Alibaba earnings tomorrow morning if you feel so inclined. Okay? All right. Let's go ahead and get started here on Alibaba. Man, I'm struggling. Let me get this coffee in me. Okay. So, I kick things off the same way every time. Taking a look at the price, consensus, and EPS surprise chart on Zacks.com. This is the single most powerful tool we have at Zacks, and it serves as a fantastic visual representation of earnings and the interaction of price with earnings. Shortly after coming to Zacks, I kind of got it. Hey, Krish, how you doing? I kind of understood it, right? I got it. Okay, we do earnings. Why? Okay, I guess earnings are going to push these stocks around. Yeah, of course. But I really didn't understand the impact of it until I started applying this price consensus and EPS surprise chart in all of my analysis. Every single time I look at a stock, this is the first thing I look at, because you can glean so much information from one chart. So the black line corresponds to the right y-axis, which is price. The green arrow is earnings beats. The red arrow, okay, there's a couple of them, earnings misses. The multicolored lines represent the evolution of our Zacks consensus estimates over time and correspond to the left y-axis. So what you see here is the gaps between these lines. That's growth, right? EPS growth year over year. So jumping off the page, you can see that shortly after the IPO, and this happens with a lot of stocks, perhaps the analysts and the insiders over there at Alibaba weren't quite on the same page. So the expectations they differed, okay? Whereas maybe they set the bar a little bit too high, and then these analysts had to, drop these over the course of the next few quarters. Here's the interesting part, though. Despite that happening, Alibaba was beating. So they were lowering the bar and beating, lowering the bar and beating, lowering the bar and beating, right? Okay. There's Hefe. Welcome. So lowering the bar and beating, lowering the bar and beating. And then now this is kind of troughed. Still have that growth baked in. Notice how there was always growth. Even as it's coming down, they still had growth. Always looking forward, always with growth. And then things really accelerated here. So when people are telling you the market's completely overbought and we're getting toppy and, it's Armageddon and they read Zero Hedge every day. By the way, these are the same people who have been on the sidelines since March of 2009, just so you know. And they were probably on the sidelines before then too. There's been a meaningful turn up in earnings expectations for Alibaba in the second half of the year. And you can see this in this chart. Kind of plodding along for 2017, not doing much, right around this sort of $4 mark. And then all of a sudden it got jacked up, right? They cooled off just a bit recently, but they jacked it up and cooled it off a little bit. Jacked it up, cooled it off a little bit. So when you're seeing this huge run in Alibaba and you're scoffing like, bah, obviously the stock's going to come down. No, it doesn't. Not if these earnings are coming up with it, right? So that's why I like using this price consensus EPS surprise chart, because you can see when the change happened and does that relate to the price action, okay? Now, we've seen charts before where this comes down and the stock goes up like crazy. Then you know you got a problem, right? But when these are trending in the right direction, along with the stock price, then it makes kind of sense. I mean, just look at this, right? So here we are, right around $4, and then all of a sudden, we're at $5. 25% increase in the current year. What did that do to the growth number? Likely it changed the growth percentage year over year, which should in turn have an effect on your multiple, right? So not only is the E in the PE increasing, your earnings are going up, but then now your price has to, your PE, you're going to pay a larger PE in order to compensate for the growth, okay? You're going to pay more. Dean, how you doing? The gang's all here. Okay, so price consensus EPS surprise chart for Alibaba. You go, yes, this is good, but it has tailed off a little bit. Why is it tailing off? And should Alibaba keep on going up? So they had a recent acquisition, and which is supposed to be accretive in the second half of this year, and it's supposed to be a few extra bucks that they're getting in. Now we're going to look at the detailed estimates page here. Right now we have them as a Zacks rank number 3 hold, and again, this isn't a bunch of us yahoos at Zacks going, I think it's a hold. This is based on the data that we get from analysts, all of their earnings estimate revisions. How have their earnings estimate revisions been? What's been the agreement in earnings estimate revisions? What's the magnitude of their moves? All sorts of stuff, okay? What's the largest upside, right? And then what's the recent surprise? They're going to report before the bell on tomorrow, Thursday, November 2nd. So again, guys, got the passcode up there. You can go ahead and dial in tomorrow morning. Tracy, how you doing? Welcome. Earnings ESP, like I said, I've been running Surprise Trader, so now this is something I talk about a little bit. This is basically our thesis is that since analysts generally lower the bar for companies to beat, that if an analyst is increasing their earnings estimate close to earnings, they better have a darn good reason why they're doing it. And then we have sort of a quantitative measure that shows the likelihood of a beat. Wild Bill, how you doing? All right, so I don't worry so much about the Zacks industry rank when you're talking about a company like Alibaba or stock like Alibaba, right? Name a competitor that's really in the same industry as Alibaba. You know, because Alibaba is kind of like this Amazon of China sort of thing, right? I mean, that's sort of the best way to say it, but they're not really butting heads. Here is the remarkable part. Yeah, don't adjust your TV screens, your computer screens. This is really happening. This is sales, not EPS. You can't engineer sales. Well, I suppose you can through acquisitions and such. Hey, David, how you doing? Current quarter, 51.31% revenue growth for the current quarter for Alibaba. Next quarter, 52.73% growth. This year, 52.64% revenue growth. These numbers are just staggering. Staggering. Because you're talking about a $35.5 billion of revenue here. AZ, I'm not sure why you're so upset about Facebook earnings. We're talking Alibaba right now, but I mean, you can talk Facebook if you want, I guess. In our chat room, there you go. A plug for the chat room here. Shoot me those emails, livetrader@zacks.com, guys, if you're not already hooked up on our distribution list, and then hang out in the chat room on Discord. All right. So, huge revenue growth is what we're looking at. Hey, Alvin, how you doing, man? Now let's look at the earnings estimates. Current quarter, 31.49% EPS growth for the current quarter. Next quarter, 25.96, but the current year number, 44.28, and next year, 31.4. So, You're right, guys. The revenue numbers aren't exactly transferring over to EPS right now. So what does that tell you? Does that mean that they're getting inefficient and ineffective on their ROI numbers? No. That's not what it means. What it means is that they're making some investments. And we know that they're making some investments, okay? They've been putting some dollars to work in other places, right? We know they're making some acquisitions and things like that, okay? So they're making moves, putting money to work, which is a good thing, okay? All right, now, not a lot of movement here on the analysts. And that's why it's a Zach's ranked number 3 hold right now, okay? If we saw a bunch of movement in one direction, then obviously this would change. But now you're seeing one guy go one way, one guy go the other. So over the course of the last 60 days, you got one analyst increasing their estimate to the upside. Last 30 days, one analyst to the downside. This is for the current quarter. Next quarter, one up, one down. Current year, one up, two down. Next year, one up, two down. Now, we saw this in the price consensus and EPS surprise chart, so that should not come as a surprise to anyone. Look at the magnitude of the trend. 90 days ago, we were looking for 98 cents for the current quarter. Now we're looking at $1.04. Next quarter, $1.66 to $1.67 to $1.65 to $1.64 to $1.60. So not a lot of movement, right? I mean, they're up, down, left, right. Doesn't matter. Not a lot of movement. This is why it's a Zach's rank number 3 hold, guys. Not a lot of movement. 461 up to 496, then 95, then 92. So, again, this is what we saw in that price consensus EPS surprise chart, right? We're up and tick down a little bit. Up, tick down a little bit, right? And if you notice, throughout Alibaba's history, it does that, right? They do this. They kind of roll it over here. Right? Okay, that's the noise they make too when they put it in. They go, I need to record that noise and just start playing randomly. Okay, so last quarter, surprise, came in at $1.17 versus estimates calling for a 93-cent EPS number, and then the quarter before, a little bit of a disappointment, the alien disappointment, and then a quarter before that, 15% beat, or 15-cent beat, 9-cent beat. So overall, it's been pretty good to the bullish side. Pretty good. Pretty good. Pretty good. Too much coffee or not enough coffee? See, this is the thing. So, my girlfriend's in New York for the next few days, and she buys this coffee called, what is it? Cafe Robusto? Is that what it is? Robusto? I feel like that's what it is. It comes in this little yellow package, and I swear it's supposed to be like espresso, but when you live in Miami, I guess you're used to real strong coffee. So so we have this in my house, and I drink like a giant cup of it, and then I'm bouncing off the walls like for hours. All right, now I wanted to look back on the revenues. Get back to my, we'll compare it to the S&P 500, okay. Khaled, how you doing? All right, so let's look at the revenues here. 2016, 27.6% revenue growth that year. Next year, 46.59. This is the year we're getting 54.36, and then next year, 35.93. How do you bet against this? These are just huge numbers, right? Huge numbers. Huge. And look at this. So they're going to report, this is what I want to warn everybody about, right? So they're going to report this number, okay? Or hopefully somewhere along the lines of this number, okay? And then look at next quarter. Boom. Put some stank on it, son. $11.7 billion next quarter, right? Huge number. Why is that? Singles Day, guys. 11/11. Singles Day. And let me tell you, every time there's a Singles Day, Alibaba stock goes bonkers. So they've basically, you want to talk about Hallmark holidays? This is the king of Hallmark holidays. They just created this holiday like, yo, I got an idea. If you're single, you should go online and buy yourself something cool. And all the single people were like, you know what? That's a great idea. I can drown my loneliness with gifts from Alibaba. So that's what they do. So Singles Day, crazy holiday, they go and they trick off a bunch of money on themselves, which is fantastic when you're Alibaba. And that's where they're doing all the work. So that's why you guys always see this quarter going crazy, right? Boom, boom, boom. So Singles Day is coming up again on 11/11. So you've got a chance to capitalize on that as well as the earnings, okay? So there's a little bit of cyclicality to this. Now, I don't want to just go throwing the pom-poms all over the place. Let's talk a little bit about valuations, my friends. Valuations. Now, let's look at forward 12 PEs, okay? Forward 12 PEs. I'm just talking, Jeff, it's all good. Besides, when you're younger, just enjoy yourself, my friend. Don't go getting, tied down. You get in trouble that way. Or they could tie you down, but you got to untie you and let you go after. Okay, so, yes, these valuations are rich, my friends. Look at that. This is forward 12 PE, okay? So, 38.5 times earnings. That's where Alibaba's at. The S&P's at 1867. Alibaba's at dirty 30. So that's way up there, right? You want to compare them to... Now, if we use... I'm not going to put Amazon on here because we know how Amazon feels about earnings. We'll do a price to sales with Amazon, though. So perhaps Alibaba in the same boat because of the huge growth. The huge growth. Jeff, you got to relinquish control every once in a while, man. Let's go to this. Let's do it. Where was I at? Valuation. Price to sales. Okay. I don't know if it's my Tiesto Pandora station or what, but I'm feeling good today, guys. Feeling real good. Okay. Now here's where it gets a little, I'm not going to say eye-popping, but, S&P's at 3 times earnings. 3 times sales, right? Alibaba, 9.8 times sales. But, of course, the growth numbers are phenomenal. Now let's enter a ticker. You know what I'm going to do. You know what I'm going to do here. Amazon. This is a bit surprising to me. I don't know about you guys, but this is very surprising to me. To see Amazon at 2.3 times sales and Alibaba at 9.8 times sales. So that's kind of rich. Really is. Then again, guys, remember what I talked about before? It's about those growth numbers, okay? So on the revenue side, right? On the revs, if you're talking 50% revenue growth versus Amazon's, 20% revenue growth, right? And this is the good part. If I ever forget exactly what Amazon's revenue growth is, I just do this. Revenue. And I can see it again. I think it's 20. Yeah, okay, 30. So Amazon's at 30% revenue growth this year now, okay? Versus Alibaba giving you the business 54%, all right? So maybe you pay more for that multiple. Let's get back here in valuation history one more time, real quick. I don't want to beat the dead horse here, but let's see one more thing. What was the other thing I was looking at? Oh, Bill, good point. I like Bill's point. That Whole Foods has been factored into Amazon's price to sales. And you guys all know that grocery stores don't really trade at huge multiples. So that's part of it. Good point there, Wild Bill. Revenue, price to sales. Where else was I going with this? I wanted to do, is this C-Trip? Is this the other Chinese e-commerce, ctrip.com? Yeah, it is. Now, C-Trip trades at 4.7 times. And then now I want to see what C-Trip's revenue growth numbers are also. Just, you know, is C-Trip an exact... And look at that. Those are huge. They've got huge revenue growth numbers. So, just something to consider, I guess, when you're looking at these multiples on Alibaba. 54% when you got other ones trading, 70%, and they're still trading at a richer valuation. Okay. One more secret thing that I've got to show you guys. Of course, those of you who have been here for a while know I've got the G14 classified stuff. That's right. Consolidated surprise. So what this tells us is 2 days before to 2 days after earnings, what's the typical move? So last quarter, what happened? Had a 5% move. Quarter before, 2%. Quarter before, 5, -3, 12er, and a 4. So you had one really big move, and the rest haven't been so much. Okay? And then we can go further back than that, and you'll see that they've, a -9, that's pretty solid move, an 8, 6, 7. So, but overall, the moves on Alibaba have not been as pronounced as you would think, right? The other thing is that I always like to look at is, okay, so this is EPS, and you've got a decent beat here. Note the extraordinary disappointment here, and the stock went up. And then another disappointment here, and the stock went up. But here's a great surprise, the upside, and the stock went down. Right? What? Because this is EPS, right? Let's just draw squiggles through the EPS. More squiggles, the better. And squiggle. Now on the revenue side, you can see the beats on the revenue side or the misses on the revenue sides, and then what those impacts have been. So then here you got revenue disappointment, and the stock goes down. And if you notice all along the rest of the way, positive numbers, positive revs. Let's go back again, see what happened here. Still positive, and there's a neg. Pause, pause, neg, neg, pause, pause, neg, neg, pause, pause. So there you go. Which brings us to one of the limitations of the Zacks rankiness. That's right, guys. I said it. Limitations. So we're doing all this kind of earnings analysis, but it's based on these earnings, EPS numbers that these analysts have, and not necessarily on just the revenue numbers that these analysts have, okay? Would it be cool to do a Zacks rankiness on the revenues? Yeah, but I would bet that when they're modeling these out, that the correlation between the two is very strong, okay? Especially the way these analysts go. They probably just look at, what the revenues, what the margins have been overall, and kind of go, well, I think the margin could be the same, and then they, push that through, okay? So yes, we're doing all the earnings analysis, but that will kind of translate on through the revenues for the most part, right? But the number that you're going to want to look for tomorrow morning is this, okay? It's not going to be this. It's not going to be this, because that's NA. It's not going to be this, because that's just the number 5. It's going to be this. 7780 million. That's the revenue number you're going to have to look for, okay? So keep that in mind. 7780. If it comes in significantly above 7780, you're going to have a huge rally on your hands. If it comes in below, you're going to have a problem. Now, let's look at charts. This is about as bullish as it gets. Look at this. I've got fibs. This must have been our last earnings report, huh? Must have. Fibs, targets. While we're on the subject of fibs, right? I'm just going to show you guys what happened, okay? So, let's just pretend that this didn't happen yet. So you find a low, you find a high, draw your retracements, fib retracements, 50% was there. But then what happens when the stock starts to inch above that, right? Well, you can draw fib extensions. So instead of pulling back this way, retracement, you push forward that way, extension, right? So I can do that on freestockcharts.com. Since I'm going in the negative direction, any extension I want, I can just do negative 61.8. That's going to be that. They also do a negative 100. Okay. So there's that. Okay. So now let's fast forward to the future. Yo, you can't write that. You can't write that. Did everybody see did you see that? The 61.8% extension of this move was exactly where Alibaba hit reversed. Isn't that incredible? Pull back to the 50. Boom. Runs into trouble at the 61.8. That's phenomenal. And then where did it go? No way. It's perfectly at the 100% extension of this, which means this move has been basically from here to here is the same as from here to here, and that's where we sit today. Wowzers. Wowzers. So this is what we have to do here. We've got to draw new levels to give us areas of potential support should the stock come down. Okay? Now, you could argue, you could use this big extension, and the math is going to be similar if I do half of it or whatever because the numbers are working. I don't want to get into the whole Fibonacci sequence with you. You just got to blindly trust me. Just have a little faith here. That I'm going to use this fib, and this is going to be where my support levels are going to be. Dave, you're talking support levels? I thought it was going to go. Guys, I'm telling you, if this thing comes down, 38.2, also the swing low, right near 168s. But before that, you got the 23.6, which happens to be at the 50-day. What you wanna look for? Yes, Charles, you are absolutely. You are at the end of that move. 100%, Charles. 100%, you're 100% on the 100%. You are at the end of that move. So then now you are in new stage, okay? So either we reverse a little bit and give up some ground, or we keep on going. Now, just because you're at that 100% doesn't mean it's over. I could probably do the same. Look, here, Charles will do another one here for you. Let's zoom in. We're going to go back in time again. And look how this worked here. Okay? Oh, man, is this good. Right? So these are the June 26th, 2016 low to the September 28th, 2016 high. This thing pulled back to the 61.8, right? Which happens to be at the 200-day moving average. And then what happens? Get up and go. And it just started running. So I could do the same thing. Let's do our negatives, right? I'm just going to do negative 100, Charles, just to show my point. No, it didn't. No way. Okay. Okay, see? So Charles, come on. Let's get rid of this. I can fix this one later. So Charles, it pulls back, boom, giddy up, goes. right? Hits that level, comes back for a couple of days, and then we're back off to the races. So could you argue that that was the end of the move? Sure. Sure you could, right? And then the next move began shortly thereafter, you know? Such a short period of time. Yes, there was a little bit of a pullback or whatever, then it goes. But here's the other thing, Charles, that I'd like you to think about, and everybody. I guess I can talk to everybody, right? It's not just me and Charles. These earnings events are going to shock the market. It's going to push it one way or the other. It's going to break the chains of any technical analysis. If there's an event that can do it, it is the earnings reports, okay? And these move markets, and these push us in one way or the other, okay? I was doing this one, right? This is where we're at. That was my new fib. Okay. So you're looking for possible sort of retracements. This is what we need to look at. All right. Now, I thought this was a little bit better. Did I use this? I used this last time, didn't I? Yeah, I did. Okay, this swing low. When I'm talking swing low, it's like the most recent low in the sequence or whatever, right? Higher lows get put in, and there we go. Okay. So here we are on this fib. You could argue it's this fib. Maybe that's actually a better fib. You know what? Now that I'm looking at this, I like this better, guys. I do like this better. Even though it's starting to... I knew you're... See? I think about that too. Profits coming for to carry you home there, Hefe. All right, let's talk about some areas too. Now, volume at price, one of my favorite charts. You got to have this. So it's a historical histogram of the volume, because I want to know at what price level has a lot of the action taking place. And it's screaming at you that a lot of it's right here. 180s, right? I don't know that that's going to be enough support, given that the 50-day is right below it. Markets do love the 50-day. That's 175.63. I bet you that's more likely where support would be to the downside should this thing stall out a little bit. If you notice, there's been a little bit of hesitance here. Okay. Now for the fun part. Digging into the options. Well, I'm rambling on today. Sorry, guys. All right. Always pull up the side-by-side view. First, we're at 187. 187.50s. Now, I just look in this front week initially to get my implied vol. Here we go. $5.05 by 5.20. The at the money call. We'll call that 5.12. The at the money put is 5.45 by 5.60 rather. We're gonna call that 5.53. We'll make up for it, right? You see that? All right. 10.65 is what the market is pricing in on this. Divided by the 187.50, you're talking a 5.68% move. And Kurt, I love it. See, Kurt doing the dirty work. That's right, folks. Listen to Kurt. Come on down to the chat room. Hang out with us. It's coming on the bottom of the screen. This is discord.gg.whatever/pbw blah blah. You guys can see it. All right. And then again, shoot me those emails, livetrader@zax.com. You know, Dr. Paul is in the building. Okay. Looking for a 5.6% move here in Alibaba. About 1065, right? So let's just say 177 is where they're looking at. Essentially, the 177. Let's do that on the chart. Let's do that on the chart. Do it. Do it. Yeah, we got to get a better address for that. So 177. That's awful close to our 50-day, my friends. And then $10 to the upside in uncharted territory all the way up there. So here's the thing, guys. Depending on how aggressive you guys want to be, right? Yesterday with the U.S. Steel, I was like, oh man, go for the gusto on this one. It just felt right. Here, what I'm liking about Alibaba on this Alibaba trade, you got the 50-day at 175.63. The options market basically pricing in a move toward 177-ish, right? 50-day is going to provide support, you know, on the downside. There may be a little rope-a-dope action like they did here, but whatever. So selling a put spread out of the money underneath that 50-day moving average is probably a decent idea. Now, I know some guys don't like the risk versus reward of the short put spread. That's fine. Do what you want. I don't care. Do whatever you want. I'm just telling you this looks like a decent idea, man. All right, so let's get into this decent idea. Change from the side-by-side to the stacked view. This way I got the calls on the top, puts on the bottom. The front week, as much fun as that is to trade. And yes, we will go back to give the gambling degenerates an idea of what to do. I mean, guilty as charged. And I hope somebody put on that U.S. Steel lotto ticket because they are living it up. Bruno all the way from Portugal. How you doing? Let's go to November. This is the November monthly expiration. Okay, it's always that third week. This is where you're going to get the most liquidity, right? Look at this. Look at the open interest on this. 39,000, 22,000, 17,000, 20. Okay, you get it. There's a lot of stuff going on over here, right? So there's just a lot of people playing in this area, which is good. Okay. Now, that's on the call side. On the put side, get similar, same stuff, man. 22,000 at the 180s, 10,488 open interest there. Boom. So there's a lot of people. Lots of stuff. Lots of stuff. Yeah, the chat room's fun. I like being, the chat room's cool. I like it. So far, so good, guys. So I was talking about selling like an out-of-the-money put spread, okay? And I just want to give you guys some things to consider, right? So here's one idea. And I got to start. I got to make sure I'm not going 11:45. Okay. All right, we're good. So look at this. Out underwear in general, I guess you could go a little bit further out. Let's see. So if you were to sell the 177.50 put, that's 297. Simultaneously buying the 175, that's 231. 66 cents would be your net credit on this one, okay? Difference in strike prices is 250 minus at 66 cents. That means you got $1.84 at risk. That's the max you could lose is 184, but the max you can make is only 66 cents. That's still good for 35.8%. And you're talking about putting it all together. And what do you need to make 35.8%? Shares of Alibaba has to close at or above 177.50 at expiration. So this is a bull credit spread for those. So this is a bull credit. What do we call this? We'll call this a 3-star risk. It means 1 to 5. This is 3 stars of risk. So it's still, it's still risky because of how much you could potentially lose here. And it's not way far out of the money, right? Yeah, we'll get you. Jeff, we'll get to the aggression. I can only do one thing at a time. All right, bull credit, 3-star risk. Short, November 17th. 177.50, 175 put spread. 66-cent net credit, okay? So yes, this is a little bit sheepish, Hefe. But I'm just throwing it out there. If you want to be more aggressive on the bullish side, then you got to get vertical. I suggest doing my halvesy. Dave, what are you talking about? These words, halvesy, you'll see. 187.50, that's going to be your anchor point. So this would be where a long call would go, right? And we want to do a call spread. Why do you want to do a call spread, Dave? Why not just outright? Well, because this costs you $6.78. So that's $600 holler, right? That you're going to put on. With commissions, it'll be $700 you're going to have to pay. And your break even is going to be way out here. So you won't even make money unless Alibaba makes a huge move. That's not good. We don't want that. So what you do is you say, okay, well, options market's pricing, about $11, right? So options market's pricing in a move basically to here. Right? Okay. So what I like to do is I call it the halvesy. So rather than going all the way out to where the options market's pricing in, I say, well, what if I just did half, right? Just half of that move. And why do I do this? And we're going to show you right now. Look at the risk versus reward on this stuff. So get this calculator in a nice place. There is no nice place. Over there. That's right, chat. You're going to have to quiet down. Actually, you guys could talk. It'll come this way. We just can't see the top of it. Okay, so 187.50, 678 if you go long that call. Simultaneously selling the 197.50, you're going to get back 305, and therein lies the spread. So the total outlay here is only 373. Compare that to the 678 if you're just long that, right? 373. Now your upside is going to be limited to $1,000 minus that 373. So you could make 627 on that 373 or 168%. Wowzers. So this big one, you can make 168 because it's 373. Okay? I'm leaving those numbers for myself, just so you know. But if you went just halfway, right? Because this one maxes out if Alibaba shares trade at or above 197.50 at expiration, okay? Which is a little ways out. By dropping the short end to 192.50, now you're going to max out at 192.50, so it's a little bit closer. Granted, you're going to have less money at risk, and you're going to have less of a potential return. But how much less? 678. Still what you're going to have to pay for the 187.50. If you're going to sell the 192.50, you're going to get back 465. So here, 213 is the amount of money you have at risk. Difference in the strike prices is $5 minus that 213 means you can make 287 on 213 or 134%. 134%. So basically you can make 134% from here to here, and then another 38% or 34% from here to here. That's why I say it's not worth it. So officially, I think the way to go with Alibaba, if you want to be a bull, is doing this. Bull debit, which is long the November 187.50, 192.50 call spread for a 213 net debit. Okay, nice little risk versus reward. You only need Alibaba shares to close at or above 192.50 at expiration, and there you go. I hate to point out the obvious that we're getting awful close to $200. Likely psychological resistance? I think so, right? It'll be like a magnet, I think. So those are the bull cases. I do want to give you a bear case, because there is a bear case. Absolutely, right? That's the thing with coming into all these. And Charles, you're asking me if are options pricing in a bigger move on the upside or on the downside. It's essentially, they typically don't give away that much information. they typically show you, or let me clarify this. The analysis that we do here, that's not obvious, okay? And I think if the options market was telling us the whole time a bigger move to one side or the other, obviously we'd be going in that direction. So this options market just is kind of neutral when it heads into these earnings reports. Now, there's other guys that do put call ratio and start throwing in all this other stuff. And yeah, I mean, we can overcomplicate this as much as possible, as much as you want. That's not what we do. So overall, the options market doesn't tell me. I don't know if it's pricing in a bigger upside move or downside move, because at the money it looks pretty darn close, right? Pretty darn close to neutral. And again, these are delayed numbers too, so there's all sorts of wrenches and stuff. Anyway, okay. Now the Bears, 187.50 is still going to be your anchor point. And remember when we said we're going to run into a little trouble down here? You still got to do that. Still likely to be some support there on the downside. And then the Bears, yeah, also November 17th. We're still in the November 17th expiration. Yeah. Okay. So the Bears, I don't think the Bears, well, I guess okay. Bears look at the halvesy also. I'm not going to go through the logic on that because we already did. This is too big. What's going on here? All right. There we go. So the Bears is pricing in this move. Again, think about doing the quote-unquote halvesy, right? What does this give you? 187.50. That's 710. That's a lot of money. Simultaneously shorting the 182.50. That's 473. You're going to get back. So 237 is the net outlay here. Difference in strike price is $5. Minus at 237 is 263. Divided by 237 is a 110% rate of return you can get. So a little bit more than a double up on the bearish side. So the bear debit here is long the November 17th, and all these are November 17th. 187.50, 182.50 put spread for, I already forgot my number. What did I say? 473 minus, nope. 710 minus 473 for 237 net debit. Okay. That's the bear debit. Wow, lots of trade ideas getting thrown out here. Oof, and I am running out of time, my friends. Holy smokes, was I talking a lot today. Man, and I feel like I have been talking a lot too. It's not like we had a lot of dead time. I'm just bouncing off the walls here. Bull debit, 4-star. 4-star risk on bull and bear debit. Okay. So what I mean by that, guys, it's very risky, right? So, you know what? We're gonna break that down to percentages one day, like likelihood of it blowing up in your face, right? And then we can game them out, I suppose. That's a feature we'll add one day. Yeah, that sounds like an idea. Lottos. Hefe, you're welcome. They're a little bit expensive. So I don't like messing with. So lottos are very high risk options trades that are likely to blow up in your face. That I suggest doing with money you find in your couch. Not a lot of us have hundreds and hundreds of dollars hiding in our couch. So in the event of, you know, a big move like we had in US steel, what's it going to look like? I don't know about this one. These are still relatively expensive going all the way out here. If you want to roll the dice on a very risky trade and you don't want to put up a lot of money, you can shift your call spread out of the money, right? So instead of buying a 187, you could say, okay, I think this market's gonna move every bit that it says and more, and then you can do a 197 200 or a 197 202 50. right? And then it's going to be, that's 82 cents with the potential to make 418 cents, right? So that's a pretty good idea. So I think that's what you should do if you want. Again, guys, I'm not a big fan of doing these on $200 stocks. But yeah, there you are, Jeff. I mean, if that's what you really want to light $270 on fire, that's one way to do it, I suppose. So there you go. So that's what I think you guys ought to do if you really want to roll the dice on something like this. Although it's pretty risky with the call spread to begin with. So there you go. All right. So I think that's what you do out of the money somewhere out there. Again, I like doing it on the $20 stocks, not the $200 stocks, right? Okay. And yes, drift after the bell, which is always good. Always another great idea. I think that, yeah, there you go, Doc. So what Dr. Paul's talking about, I got a few more minutes. Oh man, I don't have many more minutes. Is you wait until after the bell tomorrow, okay? After the reporting is done. This implied volatility number is going to shrink. So the price, so what I mean by that is the prices on these options are going to go way down after the event risk is done, okay? And then, let's say it bounces off of a certain point, then you can go long a call in the hopes that it drifts up throughout the rest of the week. Or if it skyrockets and it looks like it's coming back down, you do the same thing, okay? So it's an after event trade, lower implied volatility. You're going to pay much less for it. Okay, guys? Well, that's all I got for you here. I know I talked your ear off. That was an hour long. I never take an hour to do these. I was just in the zone, man. Holy smokes. I was talking about a lot of cool stuff to talk about. What can I say? And people, I swear to God, the people in this apartment complex must think I am a crazy person because I talk to myself all day. Crazy person. All right, guys, that's all I got for you here today on Zach's Live Trader. Thank you to all the newbies that came out. Look at all these new names, new faces. The Alibaba passcode, guys, if you want to call in, here it is up here. Right? You can always go back in the video. It's going to be there. I'll copy it again. There we go. And then we'll put it down here. Boom. So it'll be at the end of the video. I don't think the walls are that thin. I think maybe people walking by think I'm a crazy person. I don't know. I don't really care. I have a neighbor upstairs, and then I think the one to the other side of me, there's no way they can hear me because there's like another thing. And there you go. So, all right, guys, thanks so much for hanging out with me here on Zach's Live Trader. I will see you all in the chat room, and then of course tomorrow we're going to take a bite out of Apple. And I think that's at 11. That's 11 a.m. Central tomorrow. So thanks so much for hanging out with me here today, and I will see you all later. Have a good one, guys. That's right, I don't have my girlfriend. Later, everybody.